Beautiful. Much everybody on soil will have their claim opinions on what budgetary victory implies to them. A few would characterize monetary victory as having all the cash they have to be pay attention of their families, and have a comfortable domestic to live in, whereas others would feel monetarily effective on the off chance that they can retire comfortably with no obligations, and somebody else might think it means having millions to grant away and look out of the poor and so on. In whichever way you will looks at it, being financially steady is something that expels a part of push from an individual. It implies not having to stress approximately how your family will eat, or where they will live. Usually associated to a colossal weight lifted off one's shoulders. The reality that there are systems and procedures in put to guarantee you of monetary victory is comforting. One way of doing this can be through contributing in assets that can increment in esteem over time. Being able to decide the proper or reasonable assets to contribute in. Now, let's get into it. 1. Bonds. A bond can be defined as a loan from an investor to a borrower. The lender can be the public, an individual or whole companies. In most cases, the borrower is the government or a corporation. Information such as the terms of payment or the interest to be paid, as well as the maturity period, are always detailed. Bonds are assets that can be traded. In most cases, they provide a fixed income to the lender. The interest rates are always fixed, which means that you know exactly the amount you'll get when the bond matures. This means that you can rest assured that your wealth will always grow. You will have to do your due diligence when picking a bond so you know which asset can fit your investment portfolio. This is a secure way of achieving financial success. 2. Stocks. A stock is a security which gives the holder ownership of a part of an organization, business or corporation. The owner gets a proportion of the assets and profits made by the company. How much is given depends on the amount of investment that has been made. Each unit of stock is referred to as a share. The process of buying and selling of stocks is done under government laid down regulations to ensure investors are protected from malpractices that can lead to loss of their investment. Buying and selling of stocks are most commonly done on the stock market. Almost every country on Earth has a stock market. In the US there's several, the NYSE, the Nasdaq, and so on. In the UK they have the London Stock Exchange, and in South Africa, they have the JSE, Johannesburg Stock Exchange. To make it easy for investors today, there are many stockbrokers that operate online. Due diligence needs to be done though. You need to identify genuine brokers. Individuals can also buy and sell online. For those who have invested long-term in this asset, the rewards are normally huge, especially if the company is doing well and the share price is consistently on an upward trend. This also means that the dividends are also good. However, like any asset, stocks are not immune to various unforeseen market changes that can adversely affect the stocks. But in general, stocks will positively impact your wealth. Diversifying or investing in different stocks is often a wise decision to mitigate any risks, as there is no guarantee on which direction a company can take, which may impact share price and dividends. 3. Real estate. Real estate can be termed as real property, which is basically land and anything that is attached that is permanent. Real estate may come in the form of plain land with nothing built on it, industrial, commercial property, or even residential. Real estate is commonly known as one of the highest appreciating assets. Most people have secured their wealth through buying and selling real estate, building rentals for both residential and commercial use, building and selling property, farming, and so much more. When you buy property and hold it for some time, you are likely to make more money than when you just buy and sell. The time factor is very critical in this asset, as they tend to increase or appreciate in value with time. You might buy land in a very deserted place, but when you give it some years, you will find that more buyers have come into the area and developed the place, making it more valuable than it was before. Most properties tend to appreciate with time, and it is hard to get property depreciating in value unless in an area with buildings that are left unattended, and people have deserted the area for years. Even in this situation, the land itself will continue to appreciate in value. Although real estate is a very attractive asset to grant one financial success, it also comes with some risks that one needs to research and be aware of while investing. In some parts of the world, some have experienced a real estate bubble, although it generally runs for a short period of time but can adversely affect this asset. There are also many conmen and fraudsters in the field that can lead to one making losses if proper due diligence is not done. But you needn't worry too much. With thorough investigations and laws in place to protect you, real estate remains a lucrative and, to a large extent, beginner-friendly way to attain wealth. 4. High-yield saving account. A high-yield saving account will generally give you more interest than a normal savings account. However, the risks of the high-yield account are more than regular accounts. In this world, everything has a risk, but the smart way to go about it is to understand the risk and put some mitigations in place. This asset will offer you a good interest rate on your investment, and the more you invest, the better the pay. The rates will, of course, be affected if the economy is in a struggling phase, but in most cases, you still get a handsome return. When you invest in this asset, it is paramount to do research to determine the legitimate players in the market who have been tested and have made a name for themselves with a good reputation. This will lower the risk of being conned and losing your investment. Many people have become financially secure from investing in high-yield savings accounts. While a typical savings account may make you feel safer, the returns you get are very little. Take a chance and get yourself a high-yield account if you're looking to gain financial freedom. 5. Collections. Collecting knickknacks is a common hobby that many have. The surprising thing that many of us don't realize is just how valuable some of this stuff can be. Even if you have to spend money on the collection process, come sale time you'll be pleased with the rewards you reap. The main risk here is that you cannot predict if the items or assets will offer a good price in the future. This is where research comes handy. You'll have at least a rough idea of what similar items are currently worth. This mainly applies if you are a new collector. For seasoned collectors who have been in the market for a long time, this is easy as they have gained experience with time. Here are some lucrative collections you can start. 1. Wines and spirits which have been aged or matured for many years. They are scarce in the market. You can check out Vint, the link is in the description if you're interested. 2. Pieces of fine art. You should be aware that purchasing the paintings can be expensive, but if you pick the right piece, you'll get your money's worth. Look out for renowned artists and those who are currently gaining popularity. You can check out masterworks if you're interested. See vintage cars. If you love getting down and dirty, you can purchase a vintage car, restore it and sell it for a higher price. This, although an expensive collection, is a very popular one. These are just a few of the items people collect. Others include cutlery, unique household items, clothes, jewelry and many more, valuable assets which will produce wealth at the right time.